Hello nieces, hello nephews. It is your Uncle Charters, and today we had a very bearish day in the S&P 500. We had CPI this morning, faked some bulls out, give us a nice bull trap, start off in the morning, and we just continued downwards for the rest of the day. It was beautiful price action, but we're going to talk about that in a little bit. But first, here is the flow sentiment, bearish for SPY, 200K premiums or above. It's filtered for that. 78% for puts, 22% for calls. Good to see that the flow is actually following the price action. Okay, let me see. Let me check the dark pool order. Okay, so we had some good. All right, so we had some good amount of money come in, about 314.4 million at around the 436.62 level. Very interesting level. Okay. So based on the SPY, bouncing from that level, I would assume that institution accumulated and bought at that level. Okay, so interesting. We'll see what happens tomorrow, but that can be used as support level, 436.62. Anyways, let's take a look at Uncle Charters' Discord. All right, this is the plan. 7:33 a.m. Uncle Charters wrote like a paragraph here. But it's very important what I wrote this morning, okay? Because I wrote here, as most know, news-related events like CPI are notorious for severe trapping in the first hour or two, with the first move often, but not always, because we want to be nimble in this market, being fake, all right? With the first move often being fake. This means this morning, size down and be prepared for volatility and trappy moves. Okay, remember what Uncle Charter said. Usually with news-related events like this with CPI, the first move is usually the fake one, okay? We'll skip this paragraph right here. But I had a bull case scenario. Uncle Charter's only bullish if SPY recaptures the 50-day moving average around 441.6-ish, okay? This would put 442.5, 444.5, then 446 in play. Two of those price targets were hit. 446 wasn't. And I also had a bear case scenario, okay? Because we want to be ready for anything and we can make money both ways. Bear case scenario, as long as SPY is below the 50-day moving average, I am bearish with downside targets at 438.5 to 439, then 436.5 to 437, and then 434 below that. Two of those price targets got hit, okay? So pretty much I had a pretty good day, but let's take a look at the 15-minute chart and see what happened, okay? So we open here on this first candle. This first candle gave us a nice bounce, all right? This is the white line. Let me move this white line. Don't need that right now. This white line right there, that's the 442.5 support level, okay? Came right down to it, bounced. Gave us a nice strong bounce to the upside. That blue line is my 444.5 resistance level. We cleared that level. So to be honest, I missed this first move. I usually don't trade the first 20, 30 minutes, but I missed this move. Okay. Now look at this next candle. Here's where it got tricky. This next candle right here. Notice that wick on that red candle bounced right off of this blue support line. Okay. So when we get a breakout, we want to wait for the back test as a support. We got the back test as support here. That's where I enter the call. Very next candle, Uncle Charters got stopped out. Okay. However, we like to play both ways. Okay. Notice how we got a false breakout. Also CPI. I said in the plan, first move is usually the fake one. So we got a false breakout. I'm already biased about the first move, and it played me. Got the false breakdown. Boom. Enter the put. Rolled it right down to the next support level. What was the next support level? 442.5. Okay, got a couple bounces from there, right? Now, where do you buy calls? Where do you go long at? You go long or buy calls at support. Boom. Bounce from support. Went right up to the next resistant level, and it was perfectly at 444.5. Okay, that was a little too perfect for Uncle Charters, but it was perfect. Got a rejection there. If you did scalp a call from here, hopefully, we played level to level. All right. Took profits from there, okay? But remember, we look for puts from resistant. All right. So boom, hit resistant, rejection, kept on going down. All right. Hit the next one, hit the next resistant again right here. Hit the next support right there at 442.5. Very next candle, crushed right through it. When all this candle right here went as low as 441.63. Okay, so it was around my support of 441.6s. All right, and then we got some dead cat bounces right here. Okay, so what do we do when we lose a support? We watch for the back test as a resistant or if it'll recapture. Okay, so right here, I'll put the pink candle so you can see it right there on that pink where that pink candle is pointing. Okay, that's the back test. Back test and go. We lose a support. Look for the back test. If we get rejection, boom, that's where you look to enter a put. And as you can see, that trade setup worked very well. If you've been watching my video for quite some time, or if you're a Discord member, you guys know what back test and go is, okay? And it was mentioned in the Discord as well. So hopefully you guys caught it. But boom, back test and go came all the way down right to our next support level. Our next support level was 438.5 to the 439 zone. Bounced and based around there for a while. Basing that support does not favor the bulls, okay? And boom, crushed right down. Lost that support. What's our next support level? 436.5 to the 437 zone. That's what these white lines are for right here. 436.5 right there and 437 right there. Came right into our zone and where God gave us a bounce, all right? So day ended right there. Who knows what would have happened if the day was longer, but glad it wasn't. Anyways, so this is why we always want to follow the strategy. All right, we want our conviction to be in that strategy. We want, that's our edge. And what is the strategy? You short from resistant, you long at support. You buy calls at support, you buy puts at resistance. All right. Is this strategy 100%? Of course not. There's a lot of noise in the market that's going to fake you out. That's what market makers do. But you can see, based on the chart that I just showed you, and every other chart that I show you guys almost every day, I show you guys that this strategy works, okay? And it's not 100%, but it's as close as 100% as it can get, all right? Anyways, here is the daily chart, okay? And once again, we lost that 50-day moving average. All right. Bulls had a chance. They dropped the ball. And now we got another low here. Okay. So for me to be bullish, we need to recapture that 50-day moving average. That's the main critical one. All right. It's currently around 438.5 in the aftermarket. I do have it needs to clear 439. But if it does clear 439, that'll put the 50-day moving average currently around 441.35. That would be in play. And if we can clear that, then maybe the bulls can get some bullish momentum going. Okay? But as long as we're below the 50-day moving average, Uncle Chartist is bearish. All right? Just strictly following the price action here, okay? If you don't get mad at Uncle Chartist, just get mad at the price action, all right? It's not my fault. But the next support level, next critical support level, as long as we're under 439, the next critical support level is 436.5 to the 437 zone. It was tested today, and it held. So that level needs to continue to hold. But if it fails, well, we got some levels around 434. But if that level fails, all right, 434 served as a support and resistance level in the past. Okay. We may get some reaction there. And if 434 fails, I got 430.44 as the next level. That's the 61.8 retracement level, okay? Now, these fib levels based on the February low to March's high, okay? So 430.44 will be a very, very critical level. Because usually in these uptrend type of moves, when it does go in a correction mode, the 61.8 retracement level is usually where we get the bounce. Also the 50% retracement level. But I'm saying If we lose that, and then if we lose 434, 430.44 is a must hold level. All right, because if it does, we could get some more upside. It could be a bottom of the correction. Not trying to call a bottom, because even if it does test that level and bounce, I still would like for it to clear a resistant level to show that it's not a dead cat bounce. All right, but if 430.44 does fail, okay, that is going to be extremely bearish in my opinion. And according to this fib level, there's not much support until 421.85. All right. I do got some support around 427. All right. Below 430.44, I got 427 as a support level. And if that fails, then 421.85 will be in play. Okay. Of course, I'm going to, as the days go by, and if we do get closer to those levels, I'll look to refine the support and resistance levels a little bit better. And I'll report it to you guys. All right. But as of right now, we just don't want to get ahead of ourselves. Okay. It is looking bearish right now. But there's always a chance that bulls can turn it around. It's a news-driven market. Some catalyst can come up. You know, I don't know. Just be prepared for anything is the point I'm trying to make. But I'm still bearish. Only bullish if we clear resistant levels, starting with 439, then the 50-day moving average at 441.35, then the 38.2 retracement level at 442.5. Okay. And then maybe we can talk about more upsides if we can at least clear 442.5, okay? 444.5, 446, and so on. But as long as we are below the 50-day moving average, as long as SPY is not clearing any resistant level, or if it does clear a resistant level and give us a false breakout, stay bearish, guys. Follow the price action. That is Uncle Charlie's recommendation. Now, here's the VIX, all right? VIX recaptured or cleared the 23.6 retracement level yesterday at 22.94. Today, it showed follow through. It treated that level as a support. You can see with that strong wick from the bottom of this red candle and pushed up. Okay, that's a follow through. The next resistant level is at 25.72. All right, also around where the 50-day moving average is. All right, that's an area of confluence. If VIX clears that level, that will be a big win for VIX bulls and SPY bears. Okay, now if we get a strong rejection from there, that will put 22.94 back in play. And if we lose a support level, then it'll be more bearish. Okay, that's the best time to get bearish, when we lose a support level. Okay, and if VIX start getting bearish, if we get a rejection and VIX start getting bearish, SPY is bullish. All right, but remember, if VIX can clear that level, this is a very important critical level. If VIX clear it, that's not a good sign for SPY bulls. All right, good chance we head back down lower. All right, guys, so do your best to remember the levels that I just stated. You know, watch the video again, maybe write it down. But yeah, hopefully that analysis helped you guys out. And this is the TRIPLEQ. TRIPLEQ, well, it lost. Let me move these yellow ones. These are a lot. It's too many lines. But what I'm looking at right now, this is what I'm looking at. These fib levels that I got from March, mid-March's low to the end of March's high. And well, the TRIPLEQ today lost the, let's see, that's the 50% retracement level at 344.36. Okay, and it dropped all the way down. The low was 338.4 cents, but the 61.8 retracement level was at 337.86. So it didn't quite hit the support level. Okay, but right now the big resistant level for TRIPLEQ is 344.36. We lost it twice already. All right, so it's officially lost. Okay, you can even consider today as a back test or not, whatever you want. But as long as below 344.36, 337.86 is in play. And if that fails, there's a big drop to the 78.6 retracement level at 328.61. Okay? So remember, we lose 337.86. 328.61 is in play. That's the next Fibonacci level. And as always, to be bullish, it needs to clear some resistance. starting with 344.36. Actually needs to close above it. And if we do, that puts 350.85 in play for TRIPLEQ, okay? And then above that, 358.89. But as of right now, as long as below 344.36, stay bearish. That is resistant. That's where you should short it from. But if it closes above that, then cut your loss. Dow Jones also looking bearish. We had a critical support level at 340.60, but Dow Jones only went as low as 341, so didn't quite hit the support level. But we got a strong rejection from that 50% retracement level at 346.12. So N is still a lower low from yesterday. So still looking bearish. Watch that 340.6 level. If that goes, very bearish. 338.5 is in play. Then 336 is in play. All right. To look bullish again, needs back above 346, preferably above 340.2. That's this white flag right there, or resistant line from the March 30 high to April 5th high to April 8th high. Okay. So we break above that 340 let's say 347.5. Above that is bullish and puts 350.28, then 351.6 back in play. IWM still looking bearish. It tried to go up, make an up move today, ran right into the 50-day moving average with some strong selling pressure. Okay, it was at 201.66. That's a critical resistance level, and it came down and closed still below this yellow triangle pattern right here. Okay, so support for tomorrow is 196.6. If that fails, extremely bearish and puts 192, then 188 in play. Okay, to look bullish, it needs to get back above this 50-day moving average. Okay, so it needs to get above 201.66 minimum. Here is Apple. Apple tried to go test that 170 resistant level today, ultimately failed, came a little short, a few cents short, and was rejected. Closed below the 38.2 retracement level at 168.44 and closed below the 50-day moving average at 168. Okay, so this puts the next support level at 166.5. Needs to hold that. If it fails, incoming 165, then 161.5, and so on. Okay, and that will be in false breakout mode. So it needs to be bullish. If it can clear 168.44 and then 170. 170 is the critical one. That'll be a very good sign of more upside. And it'll put 172.7 in play, 174, then possibly 177, where I'd be bullish again. Okay? So here is Tesla. Tesla, a lot of lines. Let me clear that out. All right. So Tesla rejected from the 20-day moving average again. 20-day moving average sloped up a bit. All right. It was at 1,016.59. Tesla rejected from there. Next support is at 972. It didn't quite get as low. All right. A lot of the, ETFs and stuff, they, including the Apples and Tesla, made some strong moves to the downside, but they came up short from hitting support. All right. So very interesting. But 972 is still support nonetheless. If that fails, 907.75 critical level in play. All right, must hold level. All right, if that fails, that's a nice move to the downside. All right, to be bullish, it just needs to clear the 20-day moving average at 1,016.59. Keep in mind, the 20-day moving average could change by tomorrow, so make sure you turn that indicator on your charts and just watch it. If Tesla can clear it, 1,036.43, the 61.8 retracement levels in play, and that could put higher targets back in play. Starting with 1,060.5, then maybe even 1,088, then 1,128. Okay, guys? So, but as long as below the 20-day moving average, I'm bearish. And if we lose that 972 level, definitely a good entry for some puts. Make sure you get that confirmation breakdown first. Okay, gotta watch for the back test and go. And Bitcoin, not my favorite one to cover, but here it is. Lost that 50-day moving average. So now I'm looking at the 5-day moving average as a resistant. And the 5-day moving average is at 41.2K. If it can clear that, 41.9K is back in play. That's the 50-day moving average. And if it can clear that, that's bullish a little bit, Maybe get another back test of the triangle pattern up here at 43.8K, 8K. And if we clear that, that's a breakout again and we bullish. All right. And we'll see if we can do better than the last breakout. But as long as below 41.2K, I am favoring 36.7K. And if that fails, 28.7K below. All right, guys. So that's all I have for you guys today. I hope you guys found some value in this video. I really tried my best. And remember this. Family's important. And Uncle Charles love you. Peace.